All right, it's that time of the week. We should talk to Zach Abraham, Chief Investment Officer, Bulwark Capital, about all the things in the world of finance and the economy and whatnot. Hey, and I think this is a good, several people asked me this. Hey, ask Zach, is the shutdown going to do anything and scare anything, long, if it goes much longer than a week or so, or is there really nothing to worry about when it comes to the actual, market and the economy itself?
Should the market blink? Probably. Is it going to? Probably not. Now, well, hold on. Look, I can't prognosticate. My crystal ball is as cloudy as everybody else's. Okay. But I will tell you that if I'm looking at markets right now, probably 8 out of 10 of my warning lights are flashing. This is a market that is sprinting in the opposite direction of fundamentals. This is a market that's trading at the extreme high end of the valuation range it's been in for the last 5 years. Those valuation moves are not warranted. This is a market that is ignoring all bad news. So I will be surprised if there isn't. Oh, I don't know. I'll be surprised if you don't see an 8 to 15% pullback at some point over the next 30 to 45 days. That being said, the long-term driver of this market is government deficits, government spending. The government lockdown isn't going to affect that.
It probably helps because you guys can't spend.
Well, there's that. And then remember the government shutdown has nothing to do with the Fed, right? So will it have any real consequences? No. Could it provide kind of a Wile E. Coyote moment where the market all of a sudden and investors all of a sudden, maybe an extended government lockdown makes them start paying attention to actually numbers and data? If that were to occur, so then the media, right? Then the media whole storm would start. Trump got the government shut down. He collapsed the stock market, blah, blah, blah. But I would just posit whether this lockdown ends Monday, whether it extends another 2 weeks, I would expect some type of market surge in volatility pullback over the next 30 to 45 days. I'm not telling people to short the market. I'm not even telling people, look, I think now is a good time to take some profits and have some cash. That being said, I don't think that what happens over the next 30 to 45 days is going to be like reality, right? Because, well, I mean, it would be reality, but we all know when reality strikes and nobody likes it, what do? We just turn back on the printing machine, right?
Yeah.
And have the Fed fired up, government spends more money, cut rates, do all that kind of stuff. But yeah, it is interesting because when you look at data, when you look at earnings, when you look at all these different things, this market run up is all multiple expansion right now and it just shouldn't be. So it'll be interesting to see, but no, whatever happens to this market over the next month, regardless of how hard the Fed or the media tries to spin it, it'll have virtually nothing to do with the government lockdown.
Cool. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. Those are ugly job numbers. And I continue to tell everybody, because you and I have talked about this a couple times. The Fed's worry now isn't about inflation. They've got it kind of as best as they're going to get it. It's now you can't do both. You can't try to figure out how to save jobs or growth, and you can't figure out how to do inflation. And, those are job numbers coming from the fact that you go and look and like Trump's kind of doesn't have anybody in there, and it's would be more leaning towards his way. And you already said, looking, going, you thought you were going to get 50 and you lost 32. When they redo it, what is that going to look like?
Man, I would expect job numbers to not look very good for a while, meaning when you look at what's going on the immigration side, and then when you look at a slowing economy, I just don't see a lot of impetus. And more importantly, I think if you didn't have this AI CapEx boom going on right now, I think you'd be in a recession right now. Now, I can't empirically prove that, but I just...
You're right, though. I think the AI companies are just propping everybody up. They're pulling through their power of inertia. They're pulling everybody with them.
Yeah, and they are spending so much money that I think it is just clouding the underlying weakness in the economy. Now, is the economy in horrible shape? No. But guys, I mean, here's what it is, right? You have record in affordability in housing, right? You have the stock market at a new all-time high today. You are trading at 32 times earnings in the midst of a cycle that has seen more stock-based comp than anything else. And remember, really cool thing about stock-based comp, it doesn't count against earnings, right? So you factor stock-based comp in, you're probably looking at a market that's trading somewhere 40, 42 times earnings. Maybe, I mean, and it's higher, right? So to give you an idea, peak in the dot-com bubble, you hit 45. So you're right in that space right now, right? Now remember what happened after dot-com bubbles, the market went sideways for 12 years, right? Just because it got too expensive. So you add all that together, okay? We can't go back to 0% rates.
No.
Right? That ship has sailed. Okay. So you don't have that lever to pull. You're already running 7% deficits. The economy is slowing down. Does that sound like a good backdrop to you?
No.
Right? No, it just doesn't. Now, does that mean go sell everything? No. And the reason why is like everything else, just because the market is expensive does not mean there aren't things in it that aren't and that aren't worth earning. The other thing, and investors have to get this through their head, there is a lot more stock market out there than just the S&P 500. And if you are willing to look around, what you will see is the mirror image. You will start looking at companies, you look at the balance sheet, you look, they're paying a 7.5% dividend. It's trading at 6 times earnings. And then you're like, yeah, this thing must be shrinking. Then you look at it. No, 10% year over year growth, and you're kind of scratching. You're just not used to seeing things that cheap. And then you spend the day trying to figure out what's wrong with the company and why its stock's that cheap. And then you realize there's nothing wrong with it. It's just been left for dead because it's not large cap US tech. And look, Google's one of our biggest positions. They're not bad companies. I'm just saying we have been in this up to the right market for so long. Nobody's looking at the fundamentals. And I was laughing the other day with a guy, or I think it was yesterday, where he's like, how are you guys doing this year? And I'm like, we're having a really good year. And he's like, how much you up? And I'm like, 32%. And he goes, what kind of magic have you guys pulled off? And I looked at him and I go, you know what's funny about it? I go, it's been one of the most boring investment years. We've got less turnover in the portfolio. We haven't had any really great moves. We just bought good companies that were trading way too cheap and were paying us fat dividends. And that's driven the returns.
We bought value for companies in industries that were okay. They're just not sexy because they can't talk to you. Right. Because that's kind of what it is with AI. It's like, that's all that matters. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. So, what's funny about that is like yesterday, like Tesla beats a little bit of expectations. So like, oh my God, he's now worth $500 billion. I'm like, who's buying the stock at this level and sending it through the roof?
Well, it's so funny. So we were just talking about that on our show today. So, because today I saw some Tesla bulls scratching their heads because they got those numbers out, right? The sales, and sales are up 7% year over year. I mean, you got a stock trading at 262 times earnings, and investors are excited about 7% growth. Now, here's the other story behind that 7% growth. Because I had another guy look at me and go, I thought you said their business is imploding. Okay, bud, here's the deal. This is the last quarter that you can use EV tax credits. Everybody's EV sales are going to show a pop this Q. Everybody's. Okay. So with that pop, with that desperation last charge to take advantage of the EV credits, their deliveries are up 7% this quarter. That's it. Now remember, that tax credit is worth about 10 to 15% the price of the car.
It's your down payment, essentially.
100%. And that alone, it's knocking 15% off the car, and it's only increasing sales by 7%. Tesla's smoked as a car manufacturer.
Yeah.
They don't come back from this. Not as a car manufacturer.
No.
They're too far behind.
Yeah.
I'm not saying that they won't have cars. I'm just saying the narrative was Tesla's going to take over the world. Everybody's going to drive Tesla cars. They're going to sell 3 times more cars per year than Toyota. That is over. That will never happen. Book it. It's done. He's too far behind, and there's no way he can compete with labor costs in China. And that's the story.
No. I'm talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. The rest of this year, how are we feeling for the fourth quarter, especially when it comes to retail? Because I think a lot of people are, what's Santa going to be doing? Mom and dad, that kind of stuff. There is worry out there that we're kind of in a recession. Normally by now, you're seeing the big news like so-and-so's hiring 50,000 people, of which half of those will be permanent, Targets and the Walmarts and stuff. Dude, I've not seen really any of those stories.
I don't think you will. Honestly, now you might see retail sales continue to go up, but people need to adjust themselves to data, because we have all grown up in an environment where if prices or spending is going up, that's an indication of increased economic activity. Whereas now, I actually think we have higher than stated inflation.
Yeah.
And I think the inflation is getting I think the inflation is covering up economic weakness.
Because I keep saying this, man. I keep saying, you go and look and you see, okay, we spent money. We spent more than last month. We got less, though. Stuff's more expensive and we got less. Don't fool it with people are going out spending willy-nilly and spending more.
Yeah, no, I couldn't agree with you more. And I that to me, it may not be the whole story, but it is certainly part of the story. And again, to conceptualize it, you have to realize that, after a few little bouts in the 80s, inflation was not a story.
No.
It was not a story here in the United States. The threat was all deflation. And so all of our economic indicators are geared at looking things that way. Price goes up equals good. Why do you think Janet Yellen and Bernanke were saying for so many years, and even Powell said it, that they thought our biggest issue was that inflation was too low, because they're all geared to view inflation as kind of the sidecar to growth, right? That when you have growth, you have inflation, which is not true, by the way. We've had periods of growth without inflation. That's another story. But so those metrics are catching inflationary indicators and it's making it look growthy. And it's just not.
No. When you go, and this is very interesting. So I'm sitting here, I was thinking about tariffs. I'm looking to say the inflation, all of these kind of things. And I'm thinking to myself, tariffs are still hanging out over, but he's going to add new tariffs here. You've got the farmers who are, beyond pissed because they gave $20 billion to Argentina. And the next day, Argentina sold all those soybeans to freaking, way to screw us here is the way that people look. But when I look at this, I keep waiting for, they're going to rule on the tariffs. And I think if they rule against the tariffs, we got to pay all that back. What the hell does that do to us?
I don't think they will. First of all, look, if Trump walks down the hall in the West Wing, somebody's going to say that that's a violation of some kind of law, right?
Yeah.
If you look at the history of tariffs, and I'm not a legal expert on this, but from my looking into it, there's a lot of precedent, man. The president has a lot of purview as it relates to tariffs. There's certain kinds that he can't pass without congressional approval. But there's solid precedent for what he's doing. Bottom line, I hate him, love him, whatever. You and I have not shied away from criticizing the guy.
No.
We're going to call balls and strikes. I'm going to call it when it's a strike. This one isn't. He's not out of line. He is not out of purview. He is not out of step with precedent here in the United States as it relates to the executive powers and having to do with tariffs. And I don't think now, I guess I should say this. I don't think it should happen. I guess this day and age, it all depends on who the judge is, right?
Yeah.
Like it's whose court it ends up in. That's how they're going to rule.
It's going to be interesting. Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out to you because they hear, oh my God, Zach's crushing it in the market. We'd like to get a piece of that. What do they do?
Well, first of all, don't say it too loudly because you'll jinx us. But easiest way to get a hold of us, reach out, bulwarkcapitalmanagement.com. We've always got our road shows coming up every 5 or 6 weeks. We catch our daily podcast, Know Your Risk podcast. We cover everything that is finance, investing, and economic related, any politics that are related to finance and investing. And goal of that show is to deliver you a synopsis of everything important that happened financially that day in 25 to 30 minutes with no BS and no nonsense. And we're not hard to find. Google Bulwark Capital Management, Know Your Risk Radio, or Know Your Risk podcast. Excuse me.
Right on, brother. Good to talk to you. We'll do it again next week.
Hey, thanks, man. Fun as always.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.